Hey everybody, good morning. So today I wanted to talk a little bit more about the stock market and why I choose the investment strategy that I have chosen in order to make passive income for the rest of my life. So a lot of the times I get stuck on thinking about all the ways that I make income. Like I was just thinking about a few minutes ago. Okay, I have a W-2 job. Okay, I have a business. Okay, I have income coming in from the army as well. I have other passive income streams, including music and YouTube. What is it about the stock market that I want people to know? Well, as some of you already know from my story, I started off trading $10 stocks like Ford and a couple of very unknown companies. But as I got more serious about investing, I started to learn more about the market. So I studied what it did every single day and every single week. And the best way I studied it was by day trading. So as I day traded, Robinhood would prevent you from day trading consistently by only allowing you to do 3 a week, I believe. And they probably still have that parameter now for newer investors or those who haven't purchased their best package. But over time I said, okay, since I'm not allowed to day trade, I will swing trade. So what companies are going down and will likely be up a day later? What companies are down for a week and is going to be up a week from now? So I would look at that. Okay, so they're below their weekly average. Nothing has really happened. There's no bad news. And I would be reading their reports constantly. This is prior to working and getting older. I was young. I had a lot of energy. I was in college. I was working full time. But yet I was able to read the news every single day on these companies and on these stocks. And the thing about these stock picks that I would choose is I would have no more than 10 that I would be actively reading and researching every single day. As time passed, I got into options trading, and I was making hundreds of dollars a minute, an hour. And it was fun, it was exhilarating, it was exciting. But options trading wasn't an investment to me. It was more like gambling, because you're assuming something is going to go up and down, and you're fluctuating with hundreds of thousands of dollars, tens of thousands of dollars in minutes. And it's a gamble because the majority of our population, in fact more than 90% of people, do not make it in options trading. And so it was a very poor decision on my part as a 21-year-old to begin options trading, because the likelihood of having consistent success is very unlikely, even for those who are professionals and do it for the entirety of their life. And so what I looked at was, how can I continuously make money and be a multimillionaire, and what have others done to do that? Well, those people were either long-term hold investors, 5 years or more, long-term investors in real estate, long-term investors in businesses. What I realized is that you have to be long-term and you couldn't have short-term thinking. And then the ability to make money exponentially increases over time when you have these assets like houses, like businesses, like stocks and companies, right? And so I decided to become a long-term investor after losing maybe $4,000 or $6,000 in options trading. Today, as a long-term hold investor, I've started to dollar cost average. So for those of you who don't know what dollar cost averaging is, that is every day, week, or month, depending on how you decide you want a dollar cost average. You are putting in a specific dollar amount every single day, week, or month whatever according to your schedule, but you do not miss that day, week, or month once you have set it in stone. So for me, what that looked like was I'm putting in money into the stock market every 2 weeks on every Monday, every 2 weeks. So I'll miss one Monday and then I'll put it in another Monday, and it's automatic, so I don't have to think about it. Whether I have a job or I don't have a job, whether I am on vacation or not on vacation, whether I am doing what, it doesn't really matter. The amount that I put in is not a significant amount. At the beginning of every year, I put in a huge chunk into the stock market. And when I say a huge chunk, is $7,000 I put in at the beginning of every single year. That's me just being very transparent, as I always am. And then every 2 weeks, I put in a much smaller amount to just ride throughout the year. Rather than putting $500, $600, $700 every month, I just find it easier to save a lot of money and then put it in at the beginning of the month, and then just put a small chunk of change every 2 weeks. That doesn't really affect me. That doesn't really hurt. It's as small as a phone bill, to be honest with you, every 2 weeks that I put in. So with that understanding, I am able to invest in the good times and invest in the bad times. And what tends to happen is that over the course of a year, your portfolio is going to be up because more people are putting in money every single year. And so when you invest in the total stock market, let's say you invest in an S&P 500, if you dollar cost average on a monthly basis, you will end up in the green because you've bought high, but you've also bought very low. And over a 10-year period, you would see exponential growth in your portfolio. And so even now in a recession, I've been able to average 10% returns this year. And typically in any other year, I was averaging about 22 to 28% returns, which is really unheard of. And most people would never be able to claim to average such returns. And so I think I have a really good and strong portfolio. I do not watch stock news as I used to every single day. I now own about 32 to 34 companies in my entire portfolio. So I'm very diversified. I have about 5 to 6, maybe 8 total ETFs within the 34 companies that I say I hold. 8 of them to 6 of them may be ETFs. A few ETFs that I'd like to shout out, and I'm not your financial advisor, I'm just shouting out a few. NOBL is one of my favorites. O is one of my favorites. The S&P 500, I'm not sure how it's listed these days, is another good one. VOO is another one. VYM is another one. And a lot of people like SPY. I don't believe I have that as one of my stocks. And I've already made a video on why VOO is better. But if you like SPY, go for it. But understand that VOO over the long term is definitely going to yield better returns. And VOO is just the entire stock market being listed for you. And the reason why VOO is better is not because of the dividend, it's because of the growth. The growth over time is always going to give you more gains than dividend investing alone. And that's why I'm a growth stock dividend investor. I am not just a dividend investor. I'm a growth stock dividend investor, which means I look for companies that grow over time more than normal companies with a dividend. And I look for companies with a dividend that actually grow their dividend as well. So if you have a company, it's very complex to think about, because a lot of people think, oh, I got the best dividend, I'm going to make the most money. No. If a company literally grows at 10% every single year, but is at 200, that means it's at $210 versus a dividend company that grew at 20% and it's at $30, and it only grew like $6. So you're missing out on that $4, plus maybe the dividend is half as much as the $30 company. You're still going to be making a 0.5% more on the dividend on an extra $4. Over time, that type of knowledge, that type of understanding is going to benefit you, because even though the dividend is half, you're making more money off of that dividend because you have more worth in that company. And then over time, you'll see the growth. And now, of course, most small companies that have a higher dividend is not growing 2 times faster than the companies that I've listed, like VOO and others. Those type of companies are going to get 16, 12, 7% annual gains before we even start to speak on the dividend. And that is what is going to really propel them above these other companies that just pay a high dividend. Especially those companies that pay a high dividend, but they're going down in value. Those are the worst companies to invest in. You're actually losing money, or you're breaking even. Either way, you should not be doing that. So get smart, get wise, understand that I've already learned these mistakes, and that's why I'm giving you the game. I know plenty of people who invested in dividend companies that didn't grow at all. They were never in the green, always going down. The only reason they're still alive today is because they paid a high dividend, like AT&T. Never invest in AT&T. That's just one quick example without even having to do new research on it. AT&T pays a high dividend, but they're only sticking around because of their dividend. If they didn't have a high dividend, they would have already been in the gutters. And so, like, if you want to gain money, you got to really take the time to do the financial work and get the understanding. Some of the ETFs that I listed for you are great money makers, and will definitely help you to get a portfolio like mine, where you're making 10% returns during a recession and 28 to 22% returns in good times. If you like this video, make sure you leave a like, comment, and subscribe. You know I post every single day at 8 a.m. daily, and I can't wait to see you on the next one. Peace.